Hello and welcome to the Mortgage Minute, brought to you by Advantage Home Mortgage. I'm Ben Cason here with Vern, Larson, and our special guest today, Jake Sullivan, the account executive at Universal Lending, all the way in Denver, coming all the way down to see us today. Jake, how you doing?
I'm doing good today, thanks.
Good. And Vern, how are you?
I'm good. I tried to get a real underwriter to show up in, but they're like these mythical creatures that no one's ever really talked to or seen. Supposedly Jake has, a direct contact, but we couldn't get one here. So we got the next best thing. Jake's an account executive, and he probably knows the underwriting guidelines better than anybody I know. So it's a pleasure to have him, and glad he can make it down.
Good deal. Absolutely, Jake. Thank you so much for coming in, man.
Thanks for having me.
Yeah, so we've been doing this series. We've been kind of going through each step of the home buying process and kind of what that looks like, a little bit of an explanation. So for new home buyers, they can check this out and kind of get the whole series. So we just went through a really good episode talking about processing. So now we're moving over to underwriting. So can you kind of talk to me a little bit about what is underwriting? What's that part of the process?
Underwriting is us as the lender going through the whole file, making sure that Vern has done what he's supposed to do, make sure that the borrower does qualify for the loan, meaning they have the income, they have the assets to repay the loan. That's the biggest thing that we're looking for, is just to make sure that the borrowers are going to be able to make their payments. So bottom line, can you make your payments? That's what we're looking for.
Yeah, we don't want to set anybody up for failure. The underwriting guidelines are out there to make sure that we set you up for success. We don't want you to be eating ramen noodles and macaroni every night because you cannot afford this loan. So
Sure.
The underwriters really get down to the nitty gritty. They go through every line of your pay stub, every line of your bank statement, anything that we may have missed, they're going to ask for.
So like if say hypothetically I'm at this job, I'm making, maybe $4,000 a month, and I'm signing a loan for $15,000 a month. How, like you guys would be the guys to catch that.
Correct. Usually Vern is pretty good. Vern is going to catch that up front most of the time. So if he's doing his job right. But yes, we're looking at, hey, are you going to be able to make your payments? Just because, you're making, for an example, you're making $4,000 a month. You get a house that's only $1,000, but you have a car payment for $2,000 a month. Well, that's still not going to work. That doesn't add up. So we're looking at that. We're looking at the whole picture, not just the house, not just, we're looking at your whole job history, your whole income stream, all your assets. We're looking at all of that.
There's a lot of stuff they have access to that I don't. So if you own a property in another state, but you don't have a mortgage, or maybe you have a mortgage at a hometown bank that, doesn't report to your credit report, I have no way of really knowing that unless you disclose it to me. So if you skipped your mind because your brother's living there or whatever, and you own this house in Tennessee, I wouldn't really know about it unless it shows up on your credit report. But they've got some other reports that they're going to see, and then we'll get that condition once in a while, like, hey, well, tell us about this address in Boca Raton, Florida, and what's going on with it. And then oh yeah, and that's my brother's house, and things like that. But those things can halt the process, because we have to know what goes into your debt to income ratio, which we've talked about, and so that would be something that would count.
Gotcha. Yeah. So we talked about, like, with processing, that really the person that's buying the house isn't really going to see any part of that process. Is that going to be the same way for underwriting? Is it mostly behind the scenes, or? Yeah,
from the borrower's point of view, they're never going to talk with us. They're never going to talk to the underwriter. Everything's going to be communicated through Vern, through the processor. So any questions that we have about the pay stubs, about W-2s, past jobs, assets, properties in Boca Raton, all of our questions are going to come back to Vern, back to the processor, to get that information from the borrower. So the borrower is still going to be involved. They're still going to need to help us to when we have questions, the borrower is going to be the ones that are going to answer that for us. So they're still involved, but they're not directly involved with us.
Yeah, so you can't ever talk to the mythical creature yourself. You just got to have faith that's back there. let me handle that for you. But yeah, it's when the questions come back right away. We had kind of talked about with Megan, we ask you originally and we send the stuff in. Sometimes you're going to get asked 2 to 3 times to provide documents. Yeah. That doesn't mean there's a problem in your loan. That doesn't mean to get excited and, freak out. If you see me sweating, you see me get excited. If you hear my voice, that's when you want to get excited. But if I'm like, hey, we just need to know, why you're off. And right now there's a lot with the COVID, with people missing hours, I've never seen income scrutinized as hard as it's being scrutinized right now, especially, self-employed, and you miss, a couple hours because you went to the dentist. they're going to ask, what is going on? We want to make sure that you're not getting your hours cut, that that these companies aren't pulling back, and that you're going to be able to make the payment. You're not losing money. So that's really what they're looking for.
Yeah, we're just, at the end of the day, this loan is a file that gets sold to an investor. That investor is going to have all the same questions that we do. But when they buy it, they're not going to have the ability to go back to the borrower. So our job up front is to say, okay, when somebody looks at this loan, what are they going to be looking at? And we have to make sure we've got everything in there. So we've got to document it. So just, the borrower telling us, oh, no big deal, that my parents own that house. Well, we've got to be able to document it. Sure. So you've got to, hey, here's the mortgage statement showing that my parents own it, not me. So that's what we have to have that in the file instead of just, it's not that we don't trust people. It's that there's somebody else after us that's going to be looking for it. We have to give them that documentation.
And kind of if you spun it around, Ben, if you were a millionaire and you were buying loans, or a billionaire, and you want to buy a quality product, you don't want to buy something that's set up that you're going to have to foreclose on in 6 months.
Sure.
So, I always talk to my borrowers, hey, spin it around. Think if you were on the other end of this, buying it, just be patient, think about why they're asking for it. And you just got to understand there's somebody behind there that owns the paper at some point.
Can we kind of talk about that side of it? I don't think people talk about that much, that there's people buying loans like that. How does that work?
So a couple different ways. I mean, the way that, not every lender is going to be the same, but at the end of the day, whoever's closing that loan, so Universal is closing the loan, we're using our money, but we're going to turn around and sell that to an investor. So that investor could be Fannie Mae. Fannie Mae is, it's a government agency. So we could sell it to Fannie Mae. We could sell it to a bank. So there's lots of different places that it can be sold. And, anybody that's had a mortgage, you'll get a letter, hey, your loan has been transferred to. Well, that means that somebody sold your loan. So that happens almost on every single loan, that an investor buys it.
Even if your payments don't change where you're making your payment, the servicing rights could be sold, and that person could be collecting the interest that's generated from the loan. So very common. Nothing to be afraid of.
Oh, sure.
Nothing. A lot of people worry about, my loan transfers. It's as long as you make your payment, it's going to be fine. No one's going to, nothing is going to change on your end.
Sure.
Just where you mail your monthly payment.
Correct. Gotcha. Yeah. And that's as the underwriting process, that's what we're doing. We're protecting not just us, not just Vern, not just the borrower, but everybody that's going to own that down the line.
Gotcha. So what's the benefit of somebody buying a loan like that? What's their return on investment there?
Well, you're paying an interest rate. So luckily interest rates are low right now, but that interest, that's still income that a lender or an investor will make. So that's what they're buying it as an investment.
Sure.
Probably close to half of your payment, just from a normal standpoint, is going to go to interest at the beginning. Yeah. So if you're paying a $900 payment, $450 is going to the bank, and that's the money they're making each and every month until you pay off. So,
gotcha. Cool. Awesome. And then again, this isn't something that the buyer has to be too active in, right? If somebody's going to buy that, you said he sends a mail, right?
Correct. The buyer, it's almost seamless for the borrower.
Okay.
They're going to, like I said, essentially they'll just get a letter saying, hey, just so you know, on the backside, ABC doesn't own it anymore. Now XYZ owns it, but they're still making their payment to the exact same place. They don't have to change anything. But, those are all disclosures that have to be made. So they may, like I said, just take a look at it. If it makes sense, great. If not, call Vern. Vern can call me.
There are a couple scams out there where, everything, when you buy a house, becomes public record. They record your name. They'll know I was your loan officer and things like that because my name is on the deed of trust. So if it's a letter that says, hey, Vern told us to tell you to start making your payments here to the Cayman Islands, probably not legitimate. There's probably should be a letter from both places like, hey, we sold your loan. Hello, we purchased your loan, and it should line up. You know what I mean? So if you ever get anything, though, I am in the loop. I do have direct contact with Jake at all times, so I can always make sure that that's really what happened. And anybody that's just recently bought, there's a big scam about getting deeds. And I know we've talked to Cassie. You can get all those deeds for minimal, maybe $1 if we need to, maybe for free if we have it in your package already. So, but there's a really official one with the state of Colorado seal, spend $80 to get this. Don't do that. So yeah, question anybody asking you for money. However, the one that says Vern Larson Party Fund, 100% legit, 100%.
Yeah. So like if that happens, like if you have questions about how you're going to send your money and everything like that, you just contact you, Vern, right?
Yeah. I'm always here. After the process, during the process, the rest of your existence, you can call me. I'll be around, I swear. I love to spend money too much. I'll never retire, probably.
So what are like some common issues you guys have seen that people get snagged up on during this underwriting process?
Income is probably number one. And people will overestimate what they make. That's probably the biggest thing. So they'll tell Vern, I make $10,000 a month. Well, there might have been 1 month that you made $10,000, but overall, we're not looking at that 1 month. We're going to be looking at a history.
2 years.
So, look at a 2-year history. Now, obviously, there's exceptions. Hey, I graduated college and have a salary, at this new job. That's something that we can look at. So it's never cut and dry. Again, that's why Vern's there up front. That's why we're there on the back, is to go through that, make sure that you will be able to afford those payments.
And there are a lot of people that are cut and dry, but I don't really like to work with those people. I like to work with like Jake, because Jake is common sense. Like, he's 100% common sense. If we can put the stuff together, okay, this is why. All right. We just had one where the lady had only been on her job 7 months. Before that, she was in school. The FHA guideline is 2 years. Well, I didn't have any income because I was in school. Obviously, that makes sense. Now I'm a dental hygienist. I went to school for dental hygienist. It all made sense. Yeah. So we can make it work. But a lot of lenders would be, nope, 7 months, divide that by 24, that's your income. And then her income would have been $500 a month and she wouldn't have qualified. But, sure. We get the documentation, prove everything we can, and it makes it work. But yeah, Jake and his company are just amazing they really want the loans to work. Hey, if it's possible, we're going to make it work.
Yeah. The underwriter job is to, say yes or no. They're going to look at it, and that's what they tell Vern and I. Hey, yes or no. When Vern and I get a no, that's not a final no, though. So there's always ways to, Vern and I say, what about this? Take a look at, instead of just the 7 months, not only does she have the 7 months prior to that, but she went to school for this. Does that help? So there's always more that we can go back to the underwriter. There's always a way to, more to send the underwriter to make the story a better story.
Gotcha. And so then, obviously, like the example you just used, like school, then sometimes will count towards your income.
Job history.
Yeah, that's what I'm looking for.
Yep. We can definitely do that. And
if it's the same, like in this case, it was she was going to school for what she was, for the job that she was working in.
Sure.
Made perfect sense. There's other times people are like, I have a musical degree. Well, that doesn't count as the job that you're doing. Yeah. So it does have to make sense. But, that's what Vern and I are here for, is to, get more of that documentation to show the underwriter that they can make the payment.
Cool. And then are there other issues that people get snagged up on besides just income?
Absolutely.
The one I see a lot is people make payments for other people out of their bank account. So like I made Ben's car payment out of my account 3 months in a row. And then they see it. Why is he making this car payment? And I don't know.
Gotcha.
Yeah, assets. Money. So we call them assets. We're looking at your bank statement. We've got to have 2 months worth of bank statements. And in 2 months, 60 days, just think of how many different transactions that you have. Sure. You can have, like you said, you're paying for your uncle's car. You're paying for, who knows? And underwriters looking at that, they're saying, okay, well, what is this $100 payment that you're making every month? Is that a liability that you haven't told us about? Because we have to take that into account. So we're looking at that. I'm trying to think of the one that we just had come up. There's all sorts of new ways to borrow money. And that is, that's something that people should absolutely look out for. When you go to a website that says, hey, you can make 4 payments, well, that's a credit card that you're getting. You've got to know that. And that's something that you have to tell us. And you have to be able to document, hey, this is what the payments are, so that we can include that in our DTI.
Gotcha.
Yeah, it actually costs the investors and people money to report to credit. So there's a lot of things that do not report to your credit report. So if you have those bills out there, just let me know up front right away. And then it's easier for me to deal with it in the beginning than at the end. But Yeah, I do look at bank statements too, and try to find those things and question them ahead of time. NSFs are a big thing. So
what's NSFs?
That's when you don't have sufficient funds in your account and you write a check. So I think it's big in a lot of just general. There's a lot of stuff with that. So your bank's going to charge you a return fee of $25. And, I think one of these times we're going to do how to balance a checkbook just as a,
as a basic.
I don't think anybody learns. Like, I really don't think they teach it anymore. So
yeah, I never learned how to do that. Yeah.
Yeah. So that might be one that we can do later, Ben, like a podcast on that. But yeah,
maybe what a checkbook is.
Yeah.
Like
if we consistently see, hey, you've overdrawn your account. And it's so easy to do now, like if I have a debit card, my wife has a debit card, she goes and get gas. I went and bought lobster tails. You know what I mean? And we don't communicate, then we overdraft the account. So when you see that consistently as an underwriter, you start going, wait a minute, this guy wants to add $1,200 a month to his debt and he can't even keep his bank account out of the negative right now. It becomes an issue. So
sure.
I think as a new buyer, watch for that. Make sure you don't let that happen to your account.
So what role does credit score have at this step?
Credit score it's gotten to the point where, unfortunately with the COVID, the credit scores have really tightened up. So you have to have a 620. Have you guys talked about credit scores? So right now, it's hard to get anything done below 620. So, I mean, the nice part for the underwriting side is that credit scores at that point, we don't have to look at it as much because it's a 620. Before when we were going down to a 580 or even lower, that is when we really have to kind of dig into the credit itself, pick apart, hey, what payments have you been able to make?
Yeah.
Why is this specific trade line? Why were you not able to make that payment? So right now, credit score, if you have a 620, if you have a 620, it's definitely not as hard as it was, if you're below a 620.
At this point in the process, your credit score is not going to change. Nothing is going to change unless you go make a major purchase or do something that we talked about in our 5 don'ts.
Yeah.
So don't do that at this point. Don't wait. Just wait to buy a car, wait to buy your appliances, wait to do anything until after your loan closes.
Gotcha.
And funds. So your score should remain the same as what we had. We usually have 90 days, as long as their soft pull doesn't show new debt. We should be fine.
Yep, undisclosed debt. So make sure you nothing new after.
Don't go file bankruptcy. Don't quit jobs. All those things. All those
steady. Just keep it steady. Cool. So yeah, I mean, like say hypothetically, you guys find an issue. So say it's red flag.
That's rare that we find issues, right, Vern?
Very rare.
That never happens.
Jake tries to turn down every single file. I'm luckily undefeated champion.
What was the next step from there?
That's when the conversation starts. So that's when I call Vern and say, hey, we found this undisclosed debt. They have a credit card that has a $200 a month payment. And with that $200 a month payment, they don't qualify. So then that's when Vern and I, that's where we excel. That's where, okay, what can we do to make it work? Can they pay it off? Can we pay off something else? Can we refinance it? That's the thing. Between Vern and I, we know how to make stuff work. So we can come up with different ideas. What if we do this? How about we do that?
It's an unlimited list of things that we've done. I mean, we've had people sell cars. We've added people to the loan. We've reconsolidated debt.
Yeah.
We've had them pay stuff off. We've had it's unbelievable what you can do and what you can make happen.
So it's not just the end of the process then.
We've never ended the process. I mean, that's just not that's not what we do.
It's not in our blood. Yeah. We're like a pit bull. We get on that one. We don't let go.
That's awesome, guys. Sweet. Yeah. And so for universal lending, so can you talk a little bit about like what universal lending's role would be in a transaction, maybe in Pueblo that Vern's working with you? What does that look like for you on your side?
So we're the one with the money. So we're the one we're giving you the loan. So as we underwrite it, the underwriter is making that decision, yes or no. I mean, essentially at the end of the day, that's all we're asking is yes or no, will we give you this money? So we underwrite it. We give you, we say yes, and then we're the ones that sign the check. We're the ones that sends the money to the closing table.
And then I'm your advocate during the process and make sure we give them what they need to see.
Yeah. Awesome. Sweet. And then does the buyer choose you guys as the lender, or is that something that Vern does, or what does that look like?
That's my job.
Okay,
So
cool.
Each lender has specific people they're kind of looking for and specific niches that they do.
Sure.
So our first time home buyer will all go to Jake because there's no one else I would work with on a first time home buyer, than Jake. They are the ultimate, advocate for the first time home buyer. So that if you're a first time home buyer, you're going to be at Jake's company. You'll never get to know Jake because he's a mythical character.
He's behind the scenes.
Exactly. He's behind the scenes, but that's where your loan's going to go. So,
Gotcha.
But yeah, so each company offers a different thing. We're set up, I think, with like 64 different places that we can send loans if we need to. But there's definitely a core group of
there's the ones you have to report with.
Yes, that we're going to say we have great rapport and this is where we're going. This is why we're going and what we're doing. So yeah, that's my job.
Cool. So then what happens then after we get the yes from you guys? It comes into you guys, the processor or the underwriter, says, yes, it's good to go. What's the next step?
Then we go to closing, and so I think you guys had title in a couple weeks ago. So you go to the closing, and we wire money to the title company, and then title from there distributes it to the seller. So from the borrower's point of view, they really don't talk to me. They don't talk to the underwriter. They don't talk to Universal. Yeah. We're kind of just like you said. We're in the background. We're that mythical background company.
And then they're gonna make you feel famous. They're gonna send 105 signatures for you to make.
Is that how many it is these days?
You got to sign signatures all day.
I'm famous. Yeah. I'm famous.
Yeah, and if you want to hear more about what the closing looks like, we had Cassie Stevens back on. It's gonna be coming up next week. We're talking about what that looks like, what the closing process is.
Yep.
That final part. But yeah, anything else you want to talk about, Vern?
Well, there's always going to be a couple things, like I said. So, Megan's going to collect your stuff. We're going to send it to Jake or whichever investor you're going to, and they're going to have the conditions, and then we're going to check those in and then go from there. But, right up front, just tell us as much as you can on your application. That's going to make this process a lot easier. But if something pops up, hey, we're in your corner. We're going to figure a way to get it done. It may take 6 months. It may not. It may take 6 hours. So we'll see. But we're on your side. We're your advocates. We're not trying to turn your loan down.
Not trying.
We don't want to be. Yeah. The underwriters get a really bad rap of being these horrible people and trying to tear your loan apart. But they're really not. They're just trying to make a good sellable loan on the back end, and that's super important in our business now versus back in the day when we didn't have that, have those stops.
Yeah, that loan is going to have a long life. It's not just that closing. As soon, for the borrower, as soon as they close, they're done. They move into the house. But that loan it's going to have a long life. I mean, there's going to be somebody that owns it. Somebody's going to want those payments to come in. And if they're, God forbid there's a problem with it, the investor's going to want to know why, and they're going to look back. So that's what we're looking for is, hey, why did we say yes? And that's what we're putting together is, a good package that's going to last.
Make sure it's a sound investment.
Exactly.
There. Awesome. Sweet. Thank you guys so much for coming.
Thanks for coming down, Jake.
Yeah. Thanks for having me.
Yeah. It's awesome to talk to you for sure. And it's awesome. I'm excited. Thank you guys so much for coming in. This has been the Mortgage Minute. We've done so many of these so far, kind of talking about the whole process. If you kind of heard some lingo in there and didn't understand something, go catch some of the other episodes. It'll catch you up. Catch out what processing was from last week. You can go find out what the title company was from the week before that. You can talk more about like the stuff you shouldn't do whenever you're going through this whole process. We did an episode with that with Vern here a little bit while ago. We talked to a lot of people, so go check all those out. This has been brought to you by Advantage Home Mortgage.
And obviously, if you want to apply, you need a home loan. You have questions that we haven't answered on this. Always call the office. It's 719-546-3100. Always available at extension 7.
Extension 7. Awesome. Yeah, and then Vern, can you kind of speak to real quick, like during this whole process, how visible are you to the buyer? Like, are you helping them through every step still?
Every step. Yeah. Okay. I'm always there. It's, me or your processor. So if you have questions, contact me. You have questions, contact Megan or whoever your processor is, and they're going to know. And if they don't have the answer, we're going to get it.
Gotcha.
And so we're there holding your hand 100% all the way through.
Cool. All right. Good deal. Sweet. And then how do we contact you on your side over there, Jake?
You don't. You call Vern.
You don't.
You call Vern.
He's
Through
behind the
Vern.
scenes.
Okay, perfect. Okay, there you go. Perfect.
I don't have an extension.
He's like, you don't want Jake. Call him.
Jake's like, let Vern deal with me. Sweet. Awesome, guys. Thank you so much. This has been Advantage Home Mortgages Podcast, The Mortgage Minute. Only one episode to go. Be sure to check that out next week. Thank you for joining us.
Thanks, Ben.
Thanks.